Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had a whole raft of key factors which are driving markets into a more negative mindset. The glass seems to be half empty at the moment. We've seen Italian politics and populism throughout Europe really being a key factor once again. Italian budget problems over the agreement with the European Union have continued to rumble on. Question marks over the sovereign credit rating, although Moody's coming out on Monday saying that they're stable on the outlook. There's still S&P that are still yet to give their view, but certainly I think that this is going to continue to be a key factor that is driving a bit of an underperformance on the euro through this week. You've got other factors such as Brexit politics. Domestic politics in the UK really is quite a febrile atmosphere, and domestic UK politics has the ability to be a drag on sterling at the moment. We look at other factors such as the Saudi Arabian politics in terms of the Khashoggi murder and how that is going to play out through international relations. Also the trade dispute with China as yet still seems to be unresolved. If anything, seems to be getting worse, and it certainly seems as though that there is a continued sort of outlook that of negativity surrounding global interactions really through countries, and that is sort of certainly playing out at the moment. Now, in terms of other domestic factors on the US side, we've got earnings season, which seems to still be pretty strong in terms of the corporate earnings, but it seems as though that there's been a shift in how markets, how investors are looking at corporate earnings, and how the expectation is that peak earnings perhaps in the States has already now been seen. So in terms of this week, we've got growth coming back into focus. Interesting focus that I'm going to be looking at is the German IFO number. Could start to suggest that Germany is again sort of continuing to tail off, and Germany is the big powerhouse in the Eurozone economy. What impact will that have on European equity markets and also the euro? But also later on in the week we're going to be looking at the advanced reading of GDP for the States as well, so how that plays into markets. But in terms of Forex trading, what we've got is, as I said, the Italian budget issue playing into the euro underperformance, and that is a real key factor there that has dragged euro dollar back to 115, maybe even to test that 114.30 level again. Monday had a bit of a tick higher, but again it rolled over again. It seems as though that rallies are being seen as a chance to sell, and in this instance on the euro, so it's dragged euro back to sort of 115 area again. Below 114.30 it really does open 113 figure. In terms of sterling, again underperformance. Is Theresa May going to be facing a vote of no confidence? It's perfectly possible it might happen, that the Conservative MPs get enough signatures together to drive that vote, but how that would play out on sterling would be really negative again. Any sort of upheaval in terms of the Brexit process is not going to play well in terms of sterling. So we've got that factored in for cable, which is again an underperformer. Dollar yen, classic classic indicator of risk appetite really. You could argue that the dollar is slightly performing better, so again that sort of suggests that there is a very slightly well, certainly not a negative outlook for markets, but how dollar yen moves is really interesting, because yield differentials certainly I think playing going to play an increasing role if the market does not go completely risk off, and I think that would be dollar positive on that regard. Now, in terms of other factors to watch out for, are we going to be seeing a rate hike from the Bank of Canada this week? It certainly seems, although we sort of saw on Friday a disappointing inflation number, sort of means it's a little bit up in the air, I suppose, to a degree, but still the markets are factoring in a rate hike from the Bank of Canada. Onto your indices. Well, I mean, earnings season has started pretty well in the States, but again, the question mark being, has peak earnings now hit in the S&P 500? And that suggests that if companies start to sort of put out outlook statements that increasingly get fearful of the trade dispute with China, and also the slowing aspect of potentially the economy into 2019, are we going to start to see these heavy valuations on some of these US stocks really drag on the index lower? Already we've seen that playing out through the German DAX, for example, and that is under pressure through Italy as well, so that plays out into negative configuration for the big German DAX index, which is now topped out. Big resistance overhead 11,725 to 11,865. Big overhead supply there that needs to be broken, otherwise it's going to be weighing quite considerably to the downside. FTSE 100 it's always been a bit of a laggard, really, with regards to whether the market's going up or down. It lags, and certainly it's a little bit more solid, considering that you've got a bigger utilities aspect to FTSE 100, and the Brexit angle is going to still be a key factor, so that has to be watched, I think, through this week, certainly. But FTSE 100 has held up above 7,000 area, so as long as that continues to hold, then there's a prospect of an improvement, but it's not going to go anywhere very fast, I don't think. So in terms of commodity markets, well, the gold price, there are two key factors on gold: how the dollar moves and how risk appetite is perceived. It seems as though that the risk appetite element to the gold price is just taking on a little bit more of a driver in recent weeks, and that has helped to gold to find some support. There's a massive short position on the gold futures market, that contracts are being unwound on COMEX, and that has driven this gold price higher. If those contracts continue to unwind, I think that's going to continue to drive gold higher in the near term, and that means that 1236 is a key resistance on the technicals. Breakout above that, 1266, but 1220, maybe a little bit 1217, 1208 is a basis of support, and I think it's going to still be fairly well underpinned, and weakness seems to be an opportunity to buy on gold now. In terms of the oil price, well, this Saudi Arabian situation with regards to potential sanctions are going to be an issue. Will that mean that the global economy or the global community rallies around and sort of starts to put sanctions on Saudi Arabia regarding the Khashoggi murder? If that is to be the case, then we're going to see the oil price spiking higher. Any spike higher in oil is going to be deemed to be a negative, so that needs to be watched as well. Now, on the economic calendar, you've got some growth indicators through this week. You've got the flash PMIs for Eurozone and US. They will always be interesting. Again, Eurozone slightly ticking lower. German IFO I'm looking at as a key indicator to watch, because there is very strong links between German IFO and German growth. So German growth numbers, Germany being the big powerhouse behind the Eurozone economy, if that starts to fall over, which it already has been, if it continues to sort of roll back on the IFO, then that's not going to be great for the Eurozone economy, considering we're coming to the end of QE. And the US advanced GDP numbers, well, seems as though that the expectations are around sort of the low, about 3.3%. It's just slightly back from Q2, so that's still a pretty strong number, but again, is it starting to roll over again? As we approach 2019, the expectation is that US growth is going to start to sort of normalise back again, and this could be the first indication of that. So through this week, I wish you good luck in your trading, and I'll speak to you next time. Thank you.